Hi there, you're watching Market Cafe on ET Now with me, Shreyanti Singh and Snehisha, and this is the show where we get you updates from within the country as well as across the globe. Also tell you which stocks you should be keeping on your radar bright and early this morning. But well, speaking of stocks, let's take a look at the handover then coming in from Wall Street. And it looks like a strong handover after a very bad one. Even AI darling Nvidia is back.
Absolutely, it's been a pattern that we've seen one day of bad market moves coming in globally as well as back home, and then you have an immediate recovery following the next day. If I'm not wrong, this is the second or the third time this has happened in very recent times. Let's talk about what the US market did yesterday. However, the stock futures were near flatline on Tuesday evening as investors turned towards the first Federal Reserve interest rate decision of 2025. But if you take a look at what the regular trading session looked like yesterday, tech stocks led the S&P 500 higher and bought the Nasdaq to a 2% gain. Remember, just day before yesterday, Nasdaq was beaten down, and this is on the back of the DeepSeek news that we have been seeing. The two indices made a comeback after incurring sharp losses on Monday in a sell-off spurred by the emergence of China's DeepSeek and the threat it poses to artificial intelligence trade. Now, Nvidia, which suffered a roughly 17% decline on Monday, jumped nearly 9% on Tuesday. The Fed's interest rate decision tonight is now a focal point for investors. For us, it's going to be coming out tonight, as well as Fed Chair Jerome Powell's comments in the press conference. Fed Fund futures data reflect a nearly 100% certainty that the central banks will keep rates steady at a target range of 4.25 to 4.5%. This is, of course, according to the CME Group data. Investors will also be paying close attention to Powell's comments, his first press conference in President Donald Trump's second term. It's going to be an interesting one to watch out for. The two have had a contentious relationship dating back to Trump's first term, and the president has already said that he would demand that interest rates drop immediately. So that's going to be some important point of action to watch out for in today's press conference. Of course, for us, it's going to be later in the night tonight. Powell's comments and what they do with the rate decision, the FOMC's outcome, is going to be very crucial to watch for. While we're talking about that, let's talk about what the bonds are up to, because treasury yields were up and now they seem to have cooled off very nominally. 4.522% is where the US 10-year bond yield is at right now. So largely that is what that's what the US market has been doing, and that's what the Wall Street was up to yesterday.
Well, absolutely, Snehi, and it's going to be a very important outcome there because it's been quite the bone of contention. We've heard a lot of commentary coming in from US President Donald Trump. But on that note, let's move on, take a look at oil prices, because oil prices settled up on Tuesday, bouncing back from those multi-week high lows, in fact, that we've seen coming in for oil markets after the White House, in fact, said that US President Donald Trump's plans to use tariffs on Canadian and Mexican imports this week still holds. So you do have fears of weaker demand at this point linked to soft economic data coming in from China, rising temperatures elsewhere that also cap the gains. But largely when you take a look at the moves coming in for Brent, 41-cent uptick is what you're looking at for Brent. 0.5% uptick there, $77 per barrel is the kind of level that you're looking at. And even for US WTI, 0.8% uptick coming in, $73 a barrel is where US WTI was also at. Now, of course, you do have a lot of commentary coming in terms of Trump's tariff threats. That is something that is going to remain in focus. Canada and Mexico particularly are what he's talked about in terms of tariffs, and also China. So that is going to be something to watch out for as far as oil markets are concerned. But you also have another important factor, that is Libya. Local protesters did prevent crude oil loadings, and that is on Tuesday. That was at two of the key ports, major ports coming in. Hundreds of thousands of barrels per day of supply is at risk when it comes to Libya. So that is going to be the one to watch out for in terms of supply disruptions then. And moving on then, when we take a look at gold prices as well, quite the rebound you're seeing there as well from a dip in the previous session as well. So largely, when you take a look at spot gold, then 0.8% higher as well. Spot gold was also at Sneha.
Okay, so that's the lowdown on what equities and commodities have been up to. But let's begin our coverage of all the important global news this morning. Fed members have gathered for their first policy meet in the second presidential term of Donald Trump. Remember, word from the US president has already come in on being committed to lowering interest rates. The expectation is largely tilting towards almost 100% certainty that the central bank will keep policy rates in a target range of 4.25 to 4.5%. In fact, traders see the Fed on hold on till June, a span during which Trump's plans for tariffs, regulations and immigrations are likely to become slightly more clearer than what they are right now. Over the last 3 meetings, the Federal Reserve has cut rates, reducing its short-term borrowing rate by a full percentage point. Important commentary coming in from former Dallas Fed President Robert Kaplan. He also cited that 3 changes that could be disinflationary: the government spending cuts, regulatory review from the newly minted advisory panel, dubbed the Department of Government Efficiency, and Trump's drill baby drill approach energy, as well as is expected as efforts to make the sector's architecture more efficient.
Alright, then keeping on going with key updates coming in from the United States, then consumer confidence has declined for a second consecutive month in January as people grew more pessimistic about the current policy uncertainty during Trump's first month in the Oval Office. Now, the consumer confidence index fell 5.4 points and is around 104.1 in January versus revised 109.5. In December, this, remember, was below market consensus of 108.1. Since his inauguration then last week, Trump has signed dozens of executive orders and threatened to impose hefty tariffs on US trading partners, the likes of Mexico, China, and Colombia.
Okay, let's move over to IT, talk about tech and the latest on AI frenzy that has taken over the markets. OpenAI CEO Sam Altman has spoken of the strength between his company and Microsoft, which could fructify into an improved alliance between the two giants. Altman goes as far as to call the next leg of the relationship to be better than anyone is ready for. Satya Nadella responded to Altman's post on X, saying he is looking forward to all that's ahead. Remember, earlier this month, Microsoft lost its status as OpenAI's exclusive cloud provider. The announcement came after Trump unveiled his Stargate project, a joint venture between OpenAI, Oracle, and SoftBank.
You know, AI has been the talk of the town, and amid growing concerns over the global impact of AI on how people consume and process information, major digital publishers in India have now come together to take on OpenAI for copyright infringement. In fact, the Digital News Publishers Association, or DNPA, which is an association that comprises media entities in the digital space, has now joined a prominent Indian wire service lawsuit against OpenAI in the Delhi High Court. In fact, Jasprit Bindra, who's the co-founder, AI and Beyond, talks about the concept of fair use in context of AI models and also discusses how the concept then applies to AI companies which are trained on data available on the internet. Let's go across and listen into what he then had to say.
I'm sure fair use is defined in different legal regimes differently. So I don't think that there is that much of a leg that either of them have to stand on, frankly, from the fair use thing. I think the way people have to look at it is, they need to take a step back. They need to say that, look, this technology is inevitable. It's going to happen. And, what is the best way? And, a lot of the data is going to be hoovered up, is going to be sucked up, public as well as non-public, to make these models happen. That is not going to stop. So in this scenario, what is the best way that both parties can actually come and make the best situation out of it? I don't think we can look too much at, the past precedents, etc. I think, frankly, the fount of misinformation are not the AI models. We are looking at the wrong place. The origin of where the misinformation is social media, and that's where we need to look at for first address before we come to AI models.
Okay, well, lots is brewing when it comes to the artificial intelligence front, especially when it comes to OpenAI. But let's shift focus, talk about some earnings then. Boeing has lost nearly $1 billion a month in 2024 as it was grappled with a safety crisis, quality control issues, and a damaging strike. The aerospace giant lost $11.8 billion across the year, its worst results since 2020, when the aviation industry was grounded by the COVID pandemic. In the 3 months to the end of December, when strikes were affecting the business, it lost $3.8 billion. Meanwhile, shifting focus to General Motors, because that fell more than 8% in trading, even as the company beat Wall Street's top and bottom line expectations for the fourth quarter, while forecasting continued strong results for 2025. Well, the world's largest luxury company, LVMH, which is Louis Vuitton Moet Hennessy, also reported better than expected full-year sales in the strongest sign yet of a potential turnaround in the high-end sector. Remember, shares of the French luxury goods giant are currently up around 18% year-to-date, having fallen more than 13% in 2024 itself. Sales also rose more than expected in the fourth quarter to December, after falling for the first time since the pandemic in the 3 months prior. Meanwhile, coffee house chain Starbucks reported revenue ahead of Wall Street's expectations in Q4, but sales were flat year on year, coming in at $9.4 billion. Well, on that note, we'll wrap it up on the global coverage that we were covering for you on Market Cafe and slip into a very short break. When we return, we'll take stock of how the Asian markets have opened up this morning. So you stay tuned and we'll be right back. Hi there, welcome back to Market Cafe. Let's keep it going with our global coverage. Let's take a look at what the Asian markets are up to this morning. And it's looking rather steady, rather good across the board when it comes to Asia. Japan and Australian stocks have risen this morning as Wall Street has rebounded overnight, while several Asia-Pacific markets were closed for the Lunar New Year holiday. The Japan benchmark Nikkei rose 0.6% on morning and has simmered down slightly, but nonetheless it's in the green, a 0.3% uptick coming in on that front. Australia's ASX rose 0.7%. It was a strong opening for that market, continues to build onto those gains, almost 0.9% higher. It's also reversed course after losses in the previous session. Remember, this is on the back of the country's inflation numbers that rose 0.2% in December quarter and 2.4% annually, which is below the 2.5% estimated by economists. So that is looking good for Australia right now, and that is being reflected in the market sentiment right now as well. Let's take a look at what Hang Seng, Shanghai, Kospi, all of these indices are doing. Hang Seng is flat, not doing much, 0.1% uptick coming in. Shanghai is the only one that's very nominally, very marginally in the red. So not much to worry about on that front as well, just a 2-point cut coming in. Lastly, Kospi, that's the one that's getting beaten away in today's trade, 0.6% cut coming in on Kospi. So that's the one that's weighing across the Asian markets. However, you have Japan, Australia, all of them seem to be doing well this morning. When we take a look at how we have performed yesterday, it was a rather decent trading day for us compared to the cuts that we've seen in 2 to 3 sessions previously. But Nifty closed at 22,957. Today implied open indicating a start at least above the 23,000 mark. Not much expected, a flattish open, but nonetheless we're penciled into at least open above 23,000. Let's see if we're able to hold on to those levels over the course of the trading day.
Well, absolutely. It's a good handover coming in from the Wall Street. So let's really see how that pans out for us. But with that, let's take a look at the lineup that we have for you on the market at 9 a.m. Then Arun Mishra, who's the CEO at Hindustan Zinc, is going to be talking to us about their earnings. 9:20 then there's a conversation lined up about Dalal Street's budget wish list with Kunal Vora, head of India Equity Research at BNP Paribas. And to decode the earnings of Route Mobile, the management is going to be talking to us at 9:30 then. And at 9:40 then we also have Sri Ramasubramaniam S, who's the Executive Director at Union Bank, to talk to us about their earnings, to decode the earnings of Motilal Oswal Group. We have none other than Ramdev Agarwal, Chairman and co-founder of the company, to talk to us about that at 9:50. And to decode the earnings of RITES as well as V-Guard Industries, we have the management in conversation with us at 10 a.m. and 10:50. V-Guard then, the Chief Operating Officer, is also going to be in conversation with us. So keep an eye on all of those conversations that we have lined up for you.
Well, yes, lots to watch out for when it comes to today's trading session and the coverage that we have for you on the market. But ahead of the Union Budget 2025, that's just across the corner, we're all geared up for it. Let's go across and listen to Rajat Mahajan, the partner and automotive sector leader at Deloitte Auto, talks about the transformation the Indian auto sector is undergoing and the shift in customers' vehicle preferences. He listed out the factors the Finance Ministry should focus on when it comes to this sector. Let's go across and listen in.
Indian automotive market is undergoing a major transformation. We already are the third largest four-wheeler player, and we are the largest two-wheeler manufacturers in the world. So the three key trends that we can see in the next year, or in 2025, is first is with respect to customers. We'll see an emergence of silver economy, people who have disposable income, the young economy, people who have got income, who are starting to earn and they want to spend more. And the third is the Bharat economy, which is the tier 2 and 3 towns of India. There are some very interesting trends that we are seeing that next year, when we surveyed, a lot of people, nearly 14% of the people said that they'll be entering the market looking for a new vehicle for the first time. Okay. BEV, battery electric vehicles and hybrids are going to be an in thing next year. We expect nearly, as per our survey, 57% of the customers said that they will look for ICE vehicles. This is a slight increase compared to last year. However, nearly 37% of the customers will look for new energy vehicles, which is hybrids, strong hybrids, plug-in hybrids, etc. Other major trends is technology. We expect a lot of launches that will happen in this space by the OEMs who are fitted with new age features, ADAS, as well as many other technology related features. The third major trend is the changing role of the ecosystem players as well as the dealers. While it is the charging infrastructure providers or the insurance providers, finance providers, etc., both in the BEV as well as the ICE space, right, the role will emerge, and that's what we see.
Welcome back. Thank you so much for staying tuned in. Well, let's put the spotlight then on FMCG companies, because in a bid to tackle rising input costs and rupee depreciation, then you do have FMCG companies that are looking to hike product prices. And I'm talking about the likes of Parle, Godrej and HUL that are all planning to hike prices across products as well. You do have Aishwarya Patil who's standing by with more details. Aishwarya, over to you.
Well, yeah, essentials are likely to get dearer as FMCG companies are gearing up to take fresh price hikes even after the last quarter. Now, this of course comes amid rising input costs or commodity prices rising, as well as the rupee depreciation, these two being the key reasons. Now, Hindustan Unilever, Godrej Consumer Products and Parle Products are further planning to take price hikes across various products. Soaps, tea, daily essentials, home care products could see a price hike amid rising input costs. It is what they have indicated even in their con calls as well. Of course, rupee depreciation will be a double whammy to FMCG companies, and they're trying to protect their margins through this price hike is the basic underlying factor behind the price hikes. Let's talk about how much of a change you could see in the products. Parle has said that they may be increasing 7 to 8% across the board, across their product portfolio in the next couple of quarters. Godrej Consumer Products, on the other hand, is looking for a price hike in their soaps portfolio, and HUL expects also a low single digit price hike amid these rising costs of commodities to protect their margins as well. We've also heard from the management of GCPL, HUL in their con calls, and like I mentioned, Parle Products has said that they will take a one-time 7 to 8% hike but may not repeat it going forward in the couple of quarters to come. Now, the basic hikes that you could see, of course, and have been rising year on year basis. Tea has seen about 24% year on year price hike. Wheat flour is dearer by 16%. The edible oils of various kinds are available in the market, that is anywhere between 15 to 40%, and palm oil has seen a hike of at least 40% on a year on year basis. So goods could get dearer, and we'll see in the coming quarters what other FMCG companies also do as far as the price hike is concerned.
Okay, thanks Aishwarya for taking us through that. Of course, the price hikes have had an impact when it comes to FMCG companies, and we have been hearing diverse commentary on that as well. But moving away from FMCG, let's talk about an ET Now exclusive. The government is likely to prioritize the listing of Coal India's subsidiaries in FY26. My colleague Prakash is standing by with more exclusive details on the likely government push for the listings as well. Prakash, take it away.
Yes, we are learning from our sources that the government is likely to prioritize the listing of Coal India subsidiaries in FY26. In fact, it's part of the government's newest strategy to list non-core assets and subsidiaries of PSUs. We are given to understand that the DIPAM will push for the listing of at least one subsidiary in the next financial year. And CMPDI is likely to be the first subsidiary to be listed on exchanges. Along with that, the process has already been initiated by the company, but the sources are also confirming that a sufficient gap will be maintained between the listing of two subsidiaries to ensure a better market appetite. The listing proposal has already been approved by the Ministry of Coal as a nodal ministry, and DIPAM as well. In fact, Coal Ministry want the listing process to be completed in FY26. The process has been initiated, and we are learning from our sources that the DIPAM will prioritize the listing of Coal India subsidiaries in FY26.
Alright, thanks Prakash for getting us that update. Then ahead of the union budget, let's try and get a sense of what makes it to India Inc.'s budget wish list. Then listen into the word coming in from Interglobe Aviation, SpiceJet and DLF Home Developers.
2025 is going to be a very important year for Indian aviation because we'll have two big new airports opening, and Delhi and Mumbai for the first time in history will be a dual airport system. And that's already in place in Shanghai, in New York, in London, in Paris, in Tokyo. All these places have dual airports. And now for the first time, these big Indian cities in Delhi and Mumbai will have two airports. They will open in this year. So that in itself is an incredible, I would say, stimulus for aviation in India.
There are some minor signs of slowdown, and I'm sure that the government will act in a manner in which growth. I don't think there's any doubt that medium to long-term growth is assured in India. But some short-term blips, I'm sure the government will address those issues. But as far as aviation and travel and tourism is concerned, this is a booming sector. And I think there will be an effort to increase connectivity to small towns.
What the government is doing is making the right moves as far as the real estate industry is concerned. I think making credit more available and maybe that is something that I would feel that because to fuel any growth you have to have the money to circulate.
Well, all right, let's move on then. And the countdown to the union budget has begun. But what is on India Inc.'s wish list? Will the budget unleash the next generation of reforms to accelerate the Indian economy? We caught up with the top voices at CII to understand just this. Let's go across and listen to what they had to say.
We expect in the budget to continue the process of reform, continue to look at the next steps to be taken to really unlock the potential so that we can get to a kind of an 8% or beyond kind of growth rates. And what CII is recommending is, of course, focus on the next generation of reforms. It's focusing on continued focus on inclusive and sustainable developments, which means investments to fuel growth and employment. We're really talking about targeted measures for certain employment intensive sectors, MSMEs.
Our anticipation or our recommendation to the government is to not make any massive changes or any major changes in the tax regime from a capital market standpoint. So one of the other things is gradually greater allocations can be made to capital markets. I think that will be will be very helpful.
Government should continue its focus on infrastructure because it has the highest multiplier effect. I think that should not come at the expense of something else. I think what we did see in CIS SNAP poll, which we conducted in the NC very recently, is that there is really a 48% of the respondents, CEOs, felt that their investment will be higher. There'll be better investment activity going forward in H2 than in H1. And I think that positive momentum sentiment must be supported in equal measure by the budget in terms of ease of doing business.
All right, then that's the CII view coming in, but let's move on with the budget. Just a few days away, we also caught up with Siraj Hussain, who's the former Secretary, Ministry of Agriculture and Farmers Welfare and Advisory, FICCI, on what are the key asks then of the agriculture sector from the budget. Let's go across and listen in to what he then had to say in this exclusive conversation.
In the last few years, since 2019, a lot of budget of the Ministry of Agriculture has been allocated for direct income transfer to farmers in the form of PM Kisan. So for 2024-25, the allocation is 60,000 crores. Now, the agriculture sector is starved of investment. And what we notice is that, for example, last year, the budget allocation for investment was 11.11 trillion rupees. But most of it was going to defense, to infrastructure, road construction, port construction, railways, and so on. The agriculture sector has not seen the investment which is required in strengthening the value chains. For example, you would hardly find an APMC which has good cold chain facilities. The government has not been investing. The Agriculture Infrastructure Fund, it was basically created through which the government is providing interest subvention on loans given by banks for infrastructure projects in the agriculture sector. So what we need is investment by the union government directly in infrastructure in the agriculture sector. One example, Delhi Azadpur is a very big market for the agricultural produce, and you get agricultural commodities from all over North India. It is the first sale point. For example, a lot of apple comes to Delhi Azadpur Mandi. So the government can easily make Azadpur Mandi an ideal APMC market for the whole nation to emulate. For that, you need investment in APMC. I am only hoping, I am wishing, I am praying that the finance minister will find resources for making Azadpur and other mandis, at least in union territories, to make them ideal for emulation in other states.
Okay, well, while we're moving on from that, let's talk about some earnings. It was a bumper third quarter for pharma giant Cipla as it beat estimates on all fronts. Let's go across and listen into what the management of Cipla had to say about the margin guidance going forward.
From a margin perspective, the margin kind of looks high, but it's also a quarter where we have our respiratory products in the mix. So this margin percentage is not a sustainable margin percentage for Cipla. Quarter four typically is always a weak margin percentage for us because there is the reverse seasonality out of the season in India. So this is not a sustainable range of margin going forward. But I would just say that the margin improves every time we sell more respiratory products, which was the case in quarter three. Abraxane, we are hoping to, we are still waiting for approval, and once the approval comes, again, that's a long, it's a long supply chain product, so it will take a few months after approval for us to begin to launch that product. So, we're definitely hoping to be able to launch it towards the end of the second half of next year.
Alright, then with that, time for a very quick breather on the show. When we come back, some more stock-specific updates lined up for you, so don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, as promised, we have the update coming in on the stocks that you should be watching out for in trade today, bright and early this morning, and Ria is standing by with just that list. Ria, over to you.
Yes, good morning. Let's take a look at the stocks that are going to be in focus today. A lot of numbers will be in focus on the back of their quarter three numbers. First up is BHEL reporting a very good set of numbers this quarter. The revenue has gone up over 30% on a year-on-year basis. Even the net profit has seen a very big surge of around 123% over the previous year. The EBITDA has also seen a good surge of around 40.5% over the previous year, and the margins have come in at 4.2% in this quarter versus 3.9% in quarter three of last year. We also have Exide Industries reporting their quarter three numbers. Although a weak set coming in here, the revenue has gone up very marginally, and the net profit is up around 2% on a year-on-year basis. Even the EBITDA is up just 2% on a year-on-year basis, and the margins are up only 20 basis points, coming in at 11.7% in this quarter. We also have M&M Finance reporting a good set of numbers. The net interest income has gone up around 12.5% over the previous year, and the net profit has seen a surge of around 63% over the previous year. Mahanagar Gas has also reported their numbers, quite a inline mix set of numbers coming in here. The revenue has gone up around 2.7% over the previous quarter. The net profit has declined almost 29% over the previous quarter, and EBITDA is also down more than 21% sequentially, and the margins have seen a steep fall of 493 basis points over the previous quarter. SBI Cards also reporting a mix set of numbers. Net interest income has gone up around 13.2% over the previous year, but the net profit is down around 30% over the previous year. The gross NPA and net NPAs for SBI Cards have come in at 3.24% and 1.18% respectively. There's also GMR Airports reporting quite a good set of numbers. Revenue has gone up almost 20% on a year-on-year basis. EBITDA has gone up around 37% over the previous year. Margins have also seen quite a good surge, coming in at 52.2% versus 45.6% in this quarter. Also shifting away from earnings, keep your eye out on Sudarshan Chemicals. Since they have closed their rupees 800 crore QIP, they've allocated 74.76 lakh shares at rupees 1070 per share, and the floor price for this was rupees 1107.89. So keep your eye out on all of these stocks today.
Okay, well, lots of stocks to watch out for in today's trade. Another stock that's going to be very keenly observed in today's trade is Nifty 50 giant Bajaj Auto that reported an inline set of quarterly results. Let's take it across to my colleague Shrishti for the fine print of those Q3 numbers, as well as what the management has guided and highlighted in their con call going ahead. Shrishti, take it away.
Well, talking about Bajaj Auto, it was an inline set for Q3 of FY25. All the numbers actually came in line, especially the margins. 20.2% is what the company has maintained, over 20% margin yet again. In terms of the commentary, they have come up with a very positive commentary, especially with the export side, because the management is noticing the fact that given their expectation in all the key geographies, the management has surpassed that. Other than that, they were also guided for an export of 20% plus on a YY basis, and that is expected to continue in the times ahead as well. The Latin America is the largest emerging market for the motorcycle business, is what they're highlighting. The sales in Africa is seen to be improving as well. But when it comes to the domestic market, there too they have provided an industry outlook of 6 to 8% in the next 3 to 6 months is what the company is highlighting. And in that as well, 125cc segment is outperforming the rest. Other than that, on through the new launch pipeline, the company does mention that in the next coming months, there are going to be a lot of these refreshers. Even an e-rick launch is also planned by the end of this particular fiscal year. And in the EV segment as well, the company has done very well when it comes to the two-wheeler as well as the three-wheeler side of the business. And all in all, the domestic revenue, if we see, now 22% does comprise of the EV side, and the particular segment has already turned a bit neutral. So all in all, an inline set, what we can call it for Bajaj Auto, and the commentary seem to be on the positive side. Back to you.
Well, absolutely. Thanks, Srishti, for getting us that update. But keeping it going with Motown, then you do have auto majors Tata Motors and Maruti Suzuki all set to report their numbers. Take us through the what is really penciled in when it comes to both of these auto majors then.
Well, certainly Tata Motors and Maruti Suzuki all set to report its numbers. Firstly, let's start with Tata Motors here. The key to watch will be the JLR EBIT margin guidance, because do remember there was a bit of a nervousness in the street is what we were seeing in the past 2 quarters, given the volume outlook and given the suppressed volumes back in Q2. Some of these analysts were expecting that Tata Motors might not be able to meet the EBIT margin guidance when it comes to the JLR division, and the cash flow can also be a little suppressed. So any commentary on that will be the key monitorable. Because in Q3 there was a jump up in terms of a sequential volume growth for JLR business. So all in all, we are expecting a decent commentary on that front. But when it comes to the India business, the volumes were quite flattish. It's the CV segment that can actually see an improvement in the EBITDA margin term on a YY basis. So consolidated basis, the margins is expected at 13.6%. Will be the key monitorable to watch out for if the company meets that estimate or not. Onto the profit figure, 6,791 crores is what we are expecting. So all eyes on that too. But when it comes to Maruti Suzuki, here we are expecting very good set of numbers. Why so? Because the volumes have been quite supportive in the quarter gone by. But on the flip side, the discounts were also quite elevated. All in all, we are expecting the margins to be at 11.7%, which could be almost a flat growth on a YOY basis. In terms of the profit, 3,624 crores is what we are expecting. And on to the management commentary, the demand especially related to the small car segment will be the key monitorable. And onto the newly launched electric vehicle, how is the demand panning out? What is the expectation of the company is something that we will also be watching out for. Back to you.
Okay, thanks Srishti for taking us through what we're expecting from Tata Motors and Maruti Suzuki. It's of course going to be a very heavy day for you in terms of earnings. But on that note, we'll wrap it up on this edition of Market Cafe. Thanks so much for watching. As we bid you goodbye, you stay tuned because the market is up next.
If you like this video, then like, share and subscribe to ET Now.